The Indian market extends losses with the Nifty breaching the 21,900 mark. Auto and PSU banks remain the main laggards, while pharmaceutical stocks relatively outperform. Midcaps see significant underperformance.
Tata Motors, that's the top Nifty loser following a mixed quarterly performance. The management commentary is cautious. They expect no growth in the JLR EBIT margins for FY25. Brokerages, they are a little bit skeptical post the numbers. The stock is down 9%.
On the other hand, Cipla is the top Nifty gainer as the guidance of 100 basis points improvement in margin enthuses the street. The management also guides for a smooth pipeline of drug launches to support growth in the incoming years.
ABB India surges more than 7% on the back of a strong showing. The company saw revenue growth of 28% on a yearly basis. Brokerage firms UBS and Jefferies issue buy calls on the stock and raise the target price.
Polycab climbs over 2% as the stock continues to gain following a good set of fourth quarter earnings with revenue and profit both beating street estimates. Management tells CNBC-TV18 they expect demand momentum to continue for the foreseeable future.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Manglam Malu. And as you can see to the top of the screen, well, it's red across all the indices, whether it's the Nifty Bank, the Midcap Index, the Smallcap Index, all of them taking a bit of a knock. The markets are a little bit nervous heading into that election result. For the time being, though, it appears that the fall is coming on lower than expected volumes. Volumes are still not at optimal levels. So that's one word of, of advice out there. And also keep in mind that near-term low, that's the swing low of 21,777. That's a crucial mark. We're still around 100 points away from those levels. The bulls will not want that level to get taken out. Manglam.
Totally, Nigel. We'll keep an eye out on that. Were the markets to bounce, it would probably be from levels closer to current levels where we are at right now. The Midcap Index is telling you that maybe things are looking a little shaky. The India VIX has now crossed 21. So that's a near doubling, a little more than doubling in just the last 12 sessions or so. So that's something we'll have to watch out for. But be that as it may, we've seen a bit of a recovery in a lot of these stocks. So Siemens, for instance, has now moved to the high point of trade. Metropolis has, recovered. It opened in the red, and from there, it's a 4.5% up move that we're seeing. ICICI Pru has been doing well as well. And alongside that, all these FMCG stocks, remember oil prices overnight have come down as well. So as a result of which, we've seen a bit of an uptick in names like Pidilite as well as Asian Paints. Britannia also seeing a bit of an uptick. So let's see where we go from here at crucial support levels. If we maintain these levels, then maybe we can perhaps brace ourselves for a bit of a pop, but things are pretty shaky.
All right, well, let's get straight to our first management, FILIX Industries. That's the stock in focus. Post their quarter four numbers. To understand what's the way ahead, we're joined by Mr. Ajit Venkatraman, who is the managing director of the company. Hi, Ajit. Good morning, and always good to see you in. Well, volume growth actually has surprised positively. Could you tell us from where did this growth come? Break it up for us. How much of it was from agri as well as the plumbing business?
So overall, the volume has been fairly robust. We have grown over 11% in terms of volume in FY24. And it has been on the back of good performance in the non-agri segment, which has grown over 15%.
Right. So non-agri has grown 15% for the year?
That's right.
And for quarter four, if you want to split that up for us between agri and non-agri?
No, in terms of agri, it is in the higher single digits. And for non-agri, it will be in the higher double digits, in the teens.
That's for the fourth quarter or for the full year?
And that's for the fourth quarter especially, and overall for the year as well.
All right. So now the question is, what's your outlook for the next year? Because, a lot of people are saying that maybe there is a bit of a pickup in rural India. Agri accounts for about 70% of your sales out there. What's the outlook for FY25 when it comes to volumes? If you could give us a sense of how much are you expecting in agri and non-agri?
We do not split up both agri and non-agri. Overall, we expect the market to be anywhere between 10 and 15%. And that is the CAGR that we expect over the next 5 years.
Okay. And so yours would be how much if the market is 10 to 15%?
See, we expect the non-agri to be a little bit more aggressive for us. And agri will be in the normal higher single digit.
So on a blended basis, sir, what is the volume growth that we should work with for FILIX Industries? The industry grows by 10 to 15%. You outpace the industry?
We expect it to be in the same range.
Okay.
Non-agri to be growing a little bit faster.
Got it. All right. We've pretty much got that out of the way. Give us a few more details. The volume number we have. What about margins? What should the margin band look like?
So margins for the year, if you see, it has gone from FY23 11 rupees per kg on a blended average to about 13 rupees, over 13 rupees. So there is a significant improvement in margins as well. And this is on the back of efficiency, improvements in efficiency, and also in terms of the product mix.
And this is the range which is likely to continue, or will it see improvements from current levels?
We expect it to see a little bit of an improvement as we go along when the non-agri to agri mix improves.
So that's about 14, 15 rupees. I mean, if you could give us a sense of, what's the per unit margin that you generate in both agri and non-agri, and given non-agri is likely to grow faster.
We normally don't split that up. But
right.
The non-agri margins are better than the agri margins.
All right. And what about the PVC resin business? For FY24, you managed to grow, rather for FY24, there was a decline of 18% in the volumes. For the fourth quarter, you managed to grow about 19%. Are things improving there? What's the outlook for this year in the PVC business, resin business?
So in the PVC business, we did see certain supply chain issues in the first half of the year. That resulted in raw material shortages, and that resulted in lower volumes. So we expect that is behind us, but you never know with the situation in the Middle East. So that is something which we are constantly keeping an eye on. But we expect that it should be around the same range, about 230,000 metric tons for this year as well.
Okay. All right. Mr. Venkataraman, what about the cash in the books? How much is it? And how do you plan on utilizing it? Potential for a buyback, a large dividend payout, what could you do with it?
So we have a very good cash balance, and that also will be bolstered this quarter by the land sale which we have done. So given overall, yes, the cash balance is robust, and we are looking for expansions because in the next couple of years, we will have issues with capacity, and therefore we are looking actively on that. Whatever is not used for expansion will be returned back to the shareholders.
Okay, and currently you're at what? I think your total capacity you had mentioned last time was around 4.7 lakh, right?
That's correct.
And you're currently functioning at what, 70%, 75%?
Close to 70% utilization.
Got it. I had this query with regards, since you mentioned about this land sale. The street is a buzz that maybe the promoter entity is, they are coming, they're looking at coming to some kind of an agreement. And I say this is because there was no objection. We are aware that the promoters, they are currently in the courts. Is there a possibility that there will be some kind of agreement between both the promoters and, some clearing out of these cross holdings, which will be good because that clears out one of those headwinds from a stock market perspective?
See, as management, we do not get into the issues with the family, and therefore that doesn't impact any of our operations, and we stay away from it.
Right, but if there was some kind of debate, then maybe one of the promoters would object to this land sale, which didn't happen in this case. So that's why the street is hopeful that maybe we'll see some kind of agreement between both the parties. Your comment?
I will not be able to comment on this because this is completely related to the families.
Right. And is there any more land that could be then up for sale at some point in time, which is not according to you?
We do have 10 more acres of land, and we are evaluating that.
You are evaluating. And what would be the rough value of land per acre in the area where you hold land?
Approximately the same that we had sold the last parcel.
All right. And no question of merging the two listed entities as well, FILIX Cables and FILIX Industries. Do you see any synergies there?
See, as I mentioned, we are involved with the management of FILIX Industries, and we do not get into the management of other companies.
Okay, the last sale that you did of land, 25 acres were done at 470 crores. That's the broad number, right?
That's right.
So if you have 10 more acres, it should be, it should roughly be 180 to 200 crores of value, going by the same valuation.
Approximately, yes.
Can we hear about it in this fiscal?
It's too early to comment on that. But right now, it is the 25 acre parcel is what has been sold.
All right, Mr. Venkatraman, thanks a lot for joining and fielding all our questions and giving us guidance in terms of the operational performance. We'll wait by to see whether or not, the promoter entity can come to some kind of understanding. That could be an additional trigger for this year. Appreciate you joining in and filling us in with the guidance for the year. Well, let's move on then. Let's shift focus to our special segment where we get you a few ideas of profit from Money Control Pro. Nitin Agarwal of moneycontrol.com joins us to talk about a stock that he's tracking closely. Nitin?
Hello, the company that I have chosen for today is Ramakrishnan Forging, which is an auto ancillary company. Let me first touch upon its Q4 numbers briefly. The company registered a strong 18.7% growth in its export tonnage volume, leading to this significant 14.3% growth in the year-on-year growth in its top revenue, despite weakness in the domestic market. Its EBITDA margin remained largely flattish, primarily because of the increase in the free trade. There are a couple of factors that make us a bit about the company. First, the domestic business outlook. Ramakrishna Forging's fortunes are directly correlated with this commercial vehicle segment, and with the government's focus on thrust on infrastructure, mining, construction activity, the outlook for the commercial vehicle segment is very, very positive. In terms of international business outlook, with the easing of the chip supply and the supply side constraint, the production of OEMs has increased both in the North America and the Europe, and this augurs well for the company. Further, in the quarter gone by, the company has received an order worth 270 crore from the government of India for Vande Bharat projects, and it is a very, very positive for the company, as the management has hinted if this project is successfully completed, they expect to get additional orders from the government. In addition to that, the company has been aggressively focusing on the EV segment. They are targeting three-wheelers and passenger vehicle segment in this. In terms of valuation, the company is currently trading at around 25.6 times, which is at the fair value. Hence, we advise investors to accumulate this stock on correction.
All right, Nitin, thanks a lot for that. Meanwhile, just keep an eye out on the markets. The Nifty is now at the low point of trade, and it's led lower by the Nifty Bank. The Nifty Bank on the verge of breaking that 47,000 mark as well. In fact, as we speak, just hovering around that. The incremental sell-off on the Nifty has come in from, not only the banking names, but we've seen a big decline in a couple of other IT names as well. So the IT index comes up for you. That's moved to the low point of trade. And alongside that, we've seen a cut in Axis Bank, Kotak Mahindra Bank, and a big decline is what we've seen in Bharti Airtel as well. The stock below 1,300 rupees. So Bharti Airtel is among the top draggers on the Nifty in just the last few minutes or so. We'll take a short break, come back on the other side. We'll focus on the markets. But on the other side, we'll also have the management of Nitin Spinners joining in. Dinesh Nilka joins in to discuss the quarter gone by. Stay tuned. Welcome back. Even as the weakness of the market continues, let's talk about a couple of stocks that are in focus, reported their numbers. One of them is Nitin Spinners. We have the MD of the company, Dinesh Nilka, joining in, where the sales rose about 20% sequentially. We have some improvement in the margins year on year as well. The company speaks about optimized capacity utilization, increased value addition, and diversified product portfolio as key triggers for the improvement. Thanks a lot, Mr. Nilka, for joining in. If you could give us a sense of, the kind of growth that you are foreseeing in FY25, especially on the volumes, value-added products, and as a result of which the margins that you're targeting.
Good morning, and thank you for having me on the show. As far as volumes are concerned, we have implemented the capacity expansion during the last year. So the full result of that will be affected in this year. So last year, we are expecting overall an increase of about 10 to 12% volume expansion in comparison to last year for our products. As far as value addition is concerned, we are continuously focusing on value-added yarns, as well as also on the value-added fabrics, which is adding value to our base portfolio of yarns. So that particular portfolio is slowly increasing, and we are expecting this to grow further. And as far as margins are concerned, I think they are more of a they are related with the demand perspective. We have cotton prices and the raw material prices are near to its bottom levels. And from here, the demand optimization can only increase the margins going forward.
Okay, all right. Good to hear that then, Mr. Nolka. So you believe that margins have bottomed out and they'll improve from here on, if I got that correct?
Yeah, basically, margins during the last financial year itself had bottomed out. We had a lot of issues in the export markets in the last because of the Russia-Ukraine and the Israel-Hamas conflict. Now, I think the export market is looking up, and going forward, the margin should improve.
Okay, so you want to give us a band with regard to what margins we should work with, and since the export market has improved, what will it contribute as a percentage of your total revenues?
As of now, it is about 57-58% of our exports, of our total revenues, export percentages. Now, this has been in the range of 55 to 60%. As a conscious decision, we used to be exporting about 65% plus, but now we have, as a conscious decision, we have taken that we should keep it around this level itself.
All right, so 55 to 60% is what the export contribution would be. Margins, you've done what, 14.5% in the fourth quarter. The full year was closer to around 13%. How much more can we see in terms of an improvement?
With operations like the product mix and the operations like our company, we should be always in the margin. Normal margin is in the range of about 16 to 20%. So still we have a headway to go up in the margin side. But that completely depends on the demand side, which is still to come up to its full scale in the downstream sectors.
So 16+%, 16 to 20 is the broader range. You spoke about value added. You said you're increasing your focus out there. Could you give us a sense of the mix that you are targeting from value added? How much does it contribute right now? How much is this likely to do going forward?
The value added portion, including fabrics, is about 38 to 40% in that range. And going forward, we are targeting this to go up to 50%. We are trying to see that we reduce our dependence on the commodity yarn products lesser and lesser. So in next 1.5 years time, we expect that we should be in around 50% levels.
Okay, all right. Could you tell us what is the current utilization levels? And you were adding some capacities as well. So at peak levels, at current prices, what is your revenue potential?
Basically, last year, our capacity expansion got implemented by the middle of the year. So we had done a quantity of about 91,000 tons of yarn during last year. Our base capacity is about 108,000 tons. So we can do up to, on a normalized utilization level, we should be doing about 104,000 to 105,000 tons of yarn. So we have still 10 to 12% headway there. As far as at the current price levels, the top line should be around 10% up from here, in the range of 3,200 plus kind of range. We have done 2,900 crores last.
So peak revenue potential for you with your current gross block is around 3,200, sir?
About 3,300 is the full utilization level.
You're targeting 10 to 12% volume growth in FY24. If the prices stay the same, you should be reaching your peak revenue in FY25 itself, right? So what's the growth plan beyond that? Is there any capex on the cards?
We are still on the drawing boards. We are working out what are the areas where we can grow, where the demand is there, and what are the international geographies where we can grow in. So that is still on the drawing board. We have been consistently growing for past 15-20 years with a CAGR of 18-19%. So we expect to maintain that kind of momentum. So we'll come up with our exact plans going forward.
So we'll have to hear about that then in the next 2 quarters or so. I think in the first half of the year, you'll have to, move from the drawing board to the announcement, because you'll take some time to start that capacity. Otherwise, you'll be at optimal levels and there'll be no growth. Is that correct? Should be expected in the first 2 quarters of this fiscal?
Sure, you should be expecting it in the first half of this year.
All right, we'll hold you on to that. Mr. Nolka, I also wanted your thoughts on the woven fabric business. Since launch, it's done almost 600 crore of your 600 crore of revenue. That's a fair chunk, nearly 25% of your revenue, current revenue since it's launched. How much higher can that be?
There is a lot of potential over there. We see that in this business, we have grown pretty fast. We started this business in the calendar year 2020, and nearly when the COVID hit us. And still we have been able to grow this business in a very proper manner and with reasonable margins. So going forward, there is a lot of scope to grow this business. We have a lot of potentials in this business particularly. So we should be expecting our capex also diverted towards that. At the peak level, the revenue, we have reached the near to the peak level revenues in this business segment as well at this point of time.
All right, Mr. Nolka, could you quantify the cotton inventory that you're sitting on? And for how many months will it be adequate for you?
Normally, we do not share this, but you can make it out from the balance sheet and the other data which is available. So we are sitting on a very reasonable inventory. We do not have excess inventory.
So normally you sit on inventory for how long?
Normally it is about 2 to 3 months time.
And currently as well, it will be on those lines then? Or is there any big deviation?
No, not much deviation.
How have prices of cotton panned out? I mean, I remember the last price was close to around 62,000 rupees per candy. Where does it stand now?
It is at about 57,000 rupees a candy. So in the last 7 to 8 months, from October onwards, the cotton prices have remained in the band of 58,000 rupees a candy, plus minus 3,000. So it's a very fair band which has been there. So it's plus minus 5% only. So it has been quite stable, I would say, in comparison to the previous 2 to 3 years.
Got it, Mr. Nolka. We appreciate you joining in, wishing you all the best and giving us those replies. We look forward to chatting up with you during the year, and we'll wait for your announcement with regard to the expansion as well. Well, when we were having that chat with Nitin Spinners, just take a look at the market. We've seen a big recovery from the day's low, and the big boy, HDFC Bank, has gloved up. It's come out and it's batting for the bulls. Big recovery is what we're seeing in HDFC Bank. Explains why we have seen a recovery in the markets as well of around 50 points from the low point of the day. Slip in a short break, come back, continue to focus on markets. Don't go anywhere. Welcome back. Well, as we speak, there's a bit of a recovery on in the markets, led by HDFC Bank. You have Britannia as well is trying to throw in some punches for the bulls. For the time being, we'll wrap up on this edition of Chartbusters. You don't go anywhere. Trading Hour comes up next.